Hey guys and girls, welcome to tonight's Tuesday Night Live. I'll just wait for a few of you to hop online and we'll get the show started. Just waiting for you guys to hop online. Everybody's probably watching the budget tonight, working out who's going to get 20 cents back from the government that you paid $5 for. I'll just wait for you to hop on and then we'll get into some controversial topics tonight, which will be fun. Hey Colin, how you doing? First one tonight. I hope everyone's having a good night, a good week, and lots of cool things to talk about today. I'm going to start us off with inflation news around the country. Let's see what's happening out there. Our first article of today, you effing dog, the vision of an ugly brawl between a striking CFMEU trades and non-union workers. So this one's a fun one, right? Because it just goes to show the level of inflation that we're about to cop. We haven't seen anything yet. I saw an article, which I don't have printed out. I will go to that article in 2 seconds. Right, where are we? Where are we? I've got this here. So I saw something yesterday about inflation. And these are things that are being removed from inflation. So I'll go through this in a moment and read through what is missing from inflation. Coffee is an important part of American prices, almost as important as gas prices. We already exclude gas and we're moving it from the CPI inflation report. These are some discontinued average prices since 2024. Tomatoes, canned, whole, have been removed since March 2024. Shortening, vegetable oil blends have been removed, right? Who'd want to have that anyway? Like, that's disgusting, right? If you're having vegetable oil, you're cooking vegetable oil, you may as well just go and get some castor oil, or whatever it's called, from your Valvoline out of your car, right? And put that in your food too. The most important one that they've removed now is coffee. They've removed coffee from the inflation stats. So your CPI, as we can see, like, everyone's worried about the budget and, you know, is this Liberal guy or a Labor guy, or what's going to happen? Like, we're screwed, right? It's got nothing to do with these folks, right? I'm going to show you guys the funniest video I've ever seen from any politician globally ever beforehand. I'll play that in about 2 minutes for you guys, but it just goes on to show that they just keep removing everything from the CPI, which they used to do steak, and then the steak went down to sausages, and then the sausages have now turned into Beyond Meat or some sort of fake plastic 3D printed meat now, and these numbers are completely skewed. So this article that I've got, I'm going to read it to you, about a fight with the unions. Just let's read it and let's see where the real things are coming from. Disturbing vision has emerged from striking trades part of the CFMEU Industrial Action Act, attacking non-union workers crossing a picket line. A wild brawl between the picket line, where is it here? Work on Queensland's largest infrastructure project is ground to a halt after members of the CMFEU voted to strike on Tuesday in an escalation of months-long negotiation with contractors, which oversees construction of the $6.3 billion Cross River Rail. Among the union's demands are a $2,000 per week pay rise for some workers, an extra 20 days off per year, and a heat policy that would shut down operations on especially hot days. If the CFMEU demands are met, entry-level trades would bag an eye-watering salary of $240,000 a year. Right? I can't even make this shit up. Right? You can read it here. $240,000 per year, right? Tensions boiled over yesterday when the non-union workers attempted to enter a Cross River Rail, blah, who cares, right? Who cares what they're saying, right? So it just goes on to show what they are trying to do is make it fair for the tradies by giving them an extra $2,000 per week. So imagine you're building a house, right? Let's just say that you're building a house today, and do we have enough properties? Maybe. Do we not have enough properties, right? I think we know where the problem lays. So let's say that you've got a house getting built, right? I'm just drawing it, right? Just say, here's a house. right? Out of that house, you've got excavators, we've got plumbers, we've got electricians, we've got carpenters, painters, the draftsmen, some lackeys, right? There's at least 50 people that would come to site to build a house, right? A granny flat, whatever the case may be. So if you've got 50 people coming together to build a house, right? And if they just only work for 1 week on the site, they're going to work longer than that, but let's just assume that they're working 1 week on the site. That's 50 people asking for $2,000 pay rise, right? That's $100,000 extra added to the bottom line without any inflation, right? You can start seeing how this hyperinflation is going to start running out of control. Very interesting, very interesting. There's just one thing that sparked my attention this week. Equally, something that sparked my attention is a video, right? And I said just beforehand, and everyone's hopping online. They're probably like, "Well, the budget's shit. It's all another pile of lies, whatever." I've got a video here that I want to share with you. It's the funniest thing I've ever seen from any politician, and I'm going to read an article about that in a moment as well. So this here is a guy by the name of Jared Bernstein, who is Joe Biden's economic advisor, right? And, you know, people say whatever they want to say about, you know, this old guy, Biden. I'm politically atheist. I don't care if it's Trump or him. They're all actors, right? They're all actors. But I found it interesting that this is a guy that's giving the advice to the free world, right? The Americans, right? Everyone hails to, you know, how successful, how great they are. This is what your politicians know about money. Let's watch it.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Since they sell bonds and people buy the bonds and lend them the money. Yeah, so a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Folks, where do we start with that video? Firstly, it sounds like when you're watching that Wolf of Wall Street video, and he's like, "Oh yeah, Aerotine International, that's a little family out in Midwest, wherever, right? Oh, I think their mum answers the phone, right? That's your economic advisor. That's your fucking president's right-hand man, right?" Oh, look. So these are your politicians. This here, I initially saw that video, and one of my friends sent it to me, and I thought it was a skit, right? I thought it was something off Fast Forward or Full Frontal or, you know, one of those skit shows, right? And then I had to go and research this bloke, right? And as I typed it in, I got taken to the Daily Mail website, right? Which would have to be right, wouldn't it, right? Because it's mainstream media here, right? So we go to the mainstream media. Awkward moment, Biden's economic advisor, Jared Bernstein, admits he can't explain how money works, right? Jared Bernstein, Joe Biden's chief economist, faded difficulties explaining the money's workings in a documentary of or finding the money despite his role. He stumbled through concepts highlighting the confusion around government money printing and borrowing. Bernstein, who is the head of the US Council of Economic Affairs, is not formally trained in economics and has appeared to be bewildered in the clip. Jared Bernstein, the chief economist and economic policy advisor to Joe Biden. Like, I can't even make this shit up, folks. I can't make this up, right? He goes, oh, yibbity, that's all, folks, right? This guy sounds like fucking Bugs Bunny trying to explain how money works, right? Anyway, and he's meant to be the chief economist of the fucking world, free world, right? The America, the great world of the brave and free, and the leading economy. All our currencies traded in, all our world is traded in US dollars, and you've got the number one, second in charge under Joe Biden talking about this, right? And he just right. Come on, mate, come on. He sounds retarded. Anyway, he goes. I don't even care about reading this because you've seen the thing, right? You've seen it. Like, this is this is real, right? I thought it was a skit. I didn't even know the guy. I didn't even know the guy was, and he can't explain how it works, right? It's one big giant Ponzi scheme. So if you can't get the chief economic advisor to explain how money works. Oh, we borrow money, but right? Seriously, how are you expecting anyone to understand this? And they have good propaganda, media. I was talking to someone beforehand, and I used to be on the media all the time. I used to be on the news all the time, and I couldn't participate in it anymore because I saw how no one knew anything, and the whole system's a fraud. But everyone obeys without questioning, right? They just obey without questioning. And talking about obeying takes me to my next article here, which is Macquarie Bank to go completely cashless this month, right? Get ready for your central bank digital currency here, folks. Macquarie Bank customers will no longer be able to use cash as at branches from later this month as a part of a transition to a fully digital model. The bank's first announced in September last year that it would phase out cash and cheque services across all its banking and wealth management products from January to November 2024. Cash and cheque services, deposits and withdrawals may not be available from Macquarie offices from May the 20th, so next week. May 20th, customers will be unable to order new chequebook or deposit books. Phone banking services were ended in the start of March. Instead, you'll be able to make payments digitally are safer, all for your safety, right? Just remember, safe and effective, folks, just safe and effective. Safer, quicker, and more convenient way to bank. Thank you for looking after us, folks. It's always for your safety. Macquarie is also ending its partnership with NAB branches, meaning cash and cheque deposits and withdrawal will not be available from Macquarie customers at NAB branches from November the 1st. Following Macquarie's announcement last year, the Big Four banks rushed to reassure customers that they would maintain in-branch cash services. However, Commonwealth Bank, NAB, ANZ have stopped handling cash in a few branches, and the bank's efforts to make it more difficult for customers to transact in cash have sparked backlash. According to the Australian Banking Association, just under 99% of all customer interactions at the bank now occur digitally, while more than 1,600 Australian bank branches closed from 2017 and 2022. The Reserve Bank says that the so-called pandemic accelerated the decline in cash use. Only around 13% of payments were made using cash in 2022, according to the RBA's Consumer Payment Survey, down 70% in 2007. Meanwhile, the ABS data reveals dramatic drop in ATM users in recent years, down from 78 million withdrawals in 2008 to 30 million in 2023. The time that we've seen the last few years, that word, also saw more businesses refusing cash altogether, although cash acceptance remains high overall at 94% in June 2022 from 99% in February 2020. I'd say would be functionally cashless by the end of 2025. It'll still be a complete rarity. Professor economics guy at University of New South Wales Business School. We just saw how good the those professors are Oh, it's funny, right? We'll play that video again in a moment just for the fun of it. So, actually, we'll just play it again, just for those of you that are joining, just for a bits and shits and giggles. This is, oh, not that video. That's a really good
The
video.
U.S. government can't go bankrupt because we can print.
Just watch this
money.
one more time.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Since they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So, I don't think there's anything confusing there.
What's his name again? It is, just for those of you that haven't seen it, that guy's name is Jared Bernstein. He is Joe Biden's economic advisor, and I'm not bagging out Joe Biden, right? He does enough of that for himself. What I am bagging out is the fact that our so-called experts and these are the leaders of the world. They don't even know, right? They don't know how the system works that they've been implanted into. They are just actors that have been placed there to play their part in this role. And you have to dig deep to go and look at how the system works, how the monetary system works, to find out this stuff. So I'm just going to look up something here just to share with you, which is, we've shared this a lot of times. I haven't looked at it for the last couple of weeks. I was chatting to one of my mates the other day. I've told him to screenshot it when we were going over and having a laugh. The USDebtClock.org. So currently, the US debt is 34 trillion. So I remember like a month ago, or probably 60 days ago, we were sitting here saying it just clocked over $34 trillion. And now we're at 34 trillion, 735 billion, 353 million, 800 or 900. I can't even count quick enough to get the hundreds of thousands, right? So as we're talking here, it's gone up, like the US debt has gone up $1 million in the last minute, right? $1 million, not even in a minute, $1 million every 30 seconds, this debt's going up. So the world is awash of this cheap Ponzi cash, right? Everyone thinks that their cash is safe and all that. You can't get your cash anymore because it's a digital world. It's for your safety. We're protecting you. Stay at home, stay safe, lock yourself in there, and lock yourself out of the world that you could freely trade in beforehand. If you don't comply, then you will be, controlled in a different way. So interesting times. Do take note, folks. There's ways that you can get through this. Everyone's going to sit there and think, the Labor's given a good tax cut for us. Who cares about the tax, right? The biggest tax. What would you prefer to do? Would you prefer to lose 30% of your wage or 35% of your wage per week? Everyone will go, I only want to lose 30% of my wage, not 35% of it, right? So I must be doing better, right? It's like a couple of cents. Who cares? $1,000 here, $500 there. But if you're spending $100,000 a year on expenses, and the cost of that's gone up by 10% because inflation is lied to you, you've lost $10,000 worth of your purchasing power in the last 12 months. So you could be saving for that house, you could be saving for that car, you could be saving for food, you could be saving for your kids' education, whatever the case might be, being stolen at a further rate than what any of these politicians can tell you. And whatever they're going to sit on TV, they're going to sound like Daffy Duck or Elmer Fudd or whatever the fuck his name is back there that we're just watching. And they're going to be telling you some scripted load of crap through the budget, which they don't even understand themselves. So, yeah, just be mindful of that. Getting back to the last two articles, this one here is a cool one. Australian dwelling approvals declined to a 12-year low in Q1. So this article here goes on to read, Australian dwelling approvals lifted by 1.9% in March, their first rise since November last year, but coming in short of expectations of a 3% increase. Ongoing headwinds in the home building sector due to factors such as high interest rates, capacity pressures amid a sizable housing pipeline, and a weak sentiment associated with increased insolvencies drove quarterly approvals to a 12-year low. So we are now at a 12-year low for printing houses. We've got no problem printing visas, right? We keep bringing people in the country because they need to get more taxpayers, right? So we've got to bring those taxpayers in and get them in quick smart, so we just keep migration higher. But what I find interesting is that the quarterly approvals are at a 12-year low. And if we were to go to a 12-year low, that would take us to 2012, right? So if we're going back to 2012, what happened in 2012? We came into the mother of all big booms there. So we're at a position now, which we're going back to the cycle of the previous boom that we're at. So interesting, right? Why? Because of Ukraine, because of Gaza, because of climate change, because of I don't have a Ukraine logo on my Facebook profile picture, because I haven't had my latest booster, because of China, whatever they want to blame it on, right? It's insane. Dwelling approvals increased by 1.9. There's a whole pile of charts and stuff like that. But you get the drift, folks, you get the drift. But you need to learn how to fix my car. Mechanics are very expensive too. I said that going back. I remember I was at my coastal house and I did a post, and the house is one with the bricks in the wall. I've got like the white bricks behind me when I do the videos from there. And I remember doing a Facebook Live maybe about 18 months ago talking about when hyperinflation really ramps up, that the things we need to worry about is how we can reduce our expenditure, because, yeah, we've got expenditure attached to mortgages and stuff like that, but that's sort of fixed debt anyway, right? That blows up, then the asset, just remember, right, these guys never talk about the truth, right? They're just here to, try and keep the election promises and stuff like that, right? Just remember this, when you take out a mortgage, right, you think you've bought a property, right? You pay off your mortgage, you think you own that property. You never own the property, right? You never own the property, you just have, that's why when you sign a contract, right, what does it say on the front of the contract? Contract to sale, blah, blah, right? But it says on the front of the contract, joint tenants in common, right? But what is a tenant in common, right? I thought, shouldn't it be buyer in common, joint buyers, right? No, right? It's tenants in common because you're only tenant of the land, really. So, you never really own anything. But you think you're buying a property, you think you're getting a mortgage on it, you think all these things that you're doing. Reality of it is that you are getting a property, you're expanding the monetary system, you're expanding the amount of capital out there in the system. But by you signing that mortgage becomes someone else's asset, right? So that debt that you've got is someone else's asset. So if you blow up in this whole system, if the property blows up in this whole system, then someone else's asset goes to zero. So at all costs, you might think that, okay, it's really bad to have debt, and that's going to be the discussion today, is living on debt or living debt-free. But that is actually an asset for someone else. So you want to look at how, where are you playing with your bets there? So we'll get into that in a moment a little bit further. I've got one last article which I find amusing. Air Vanuatu cancel all flights to Australia and New Zealand. I only need to read the first sentence, and I think that you will understand instantly why the whole rest of the thing is irrelevant. Air Vanuatu has cancelled its flights to and from Sydney, Brisbane and Auckland through to at least Sunday, with flights after this under review. The airline may now enter in voluntary administration, a spokesperson told News.com, with specialists from Ernst & Young flying to the island nation to help Vanuatu government with its national character. They will go undergo an assessment of Air Vanuatu's financials. So we had Bonza Airline last week going Bonza, and today we've got Air Vanuatu, right? So what is happening out there? Why are these corporations dropping faster than sports stars? Why are they going under left, right and centre? What is happening out there? Going back 3 years ago, I said that this level of debt that we've got will end up seeing the zombie companies rise. So we've got zombie companies, we've got zombie nations. Everyone is fearful of the debt and, how does the debt stack up in this whole system? But they're not realising what the whole system is made up upon. I was reading an article the other day, or maybe I was listening to it in a podcast, somewhere where I was looking at. It was a George Gammon Rebel Capitalist podcast, and he was talking about how McDonald's is in trouble now. I'm not saying that McDonald's is going bankrupt, but it would be interesting, right? Like McDonald's is the largest landowner out there. McDonald's is very, very well known out there. Everybody's had McDonald's, right? At some capacity, they've eaten some of their plastic, no good food. But when you look at McDonald's, the entry price, who is their target market? The entry price for McDonald's is for a poor family. That's why, certain locations, you'll find that the poorest areas of Sydney, for example, have the most amount of McDonald's, one on every corner. And it's because that's their target market, is to get those folks in there. The problem is that because of inflation, the cost for those families can't afford to have it. So you're not having the middle class, you're not having other people going and buying that food. They are... Jane just said here, McDonald's on either side of the M4 have shut down. Yes, and if you have a look at the McDonald's on the M1 or the F3 freeway in New South Wales, in Sydney, going up the Central Coast, they have changed over as well to Hungry Jack's. I don't know the answer behind that. I don't know why it's their leases up or whatever the case may be. But I've never seen a McDonald's close down like that beforehand, especially in such a prime location. But we're sitting in a world now where it could be a possibility that one day these companies blow up because their client base is bankrupted and they're in a recession. Someone just said here, should be watching TV, budget hilarious, right? Exactly. You're not going to find this fun on TV because they can't tell you. They don't have the answers. You go to your politicians, your prime ministers, whoever it is that's in the public figure to go, oh, please tell me, how can you get me to salvation? But these guys are just a bunch of mumbling puppets that we've seen as per our last video we had. If you're just watching this now, go back, you'll find it funny later on when you watch. I'm not going to play it for the third time. Maybe at the end we'll play the video just for a bit of a laugh. But it's something that, it's who would have thought would be sitting here, right? I couldn't picture that, would start seeing McDonald's closing down or anything like that. But where will it stop, right? And eventually it will come at the cost of our currency, and our currencies will turn to nothing. They'll turn to dust, and they'll be hyperinflated. And we have started the hyperinflation. I was the first person to talk about hyperinflation. I'll continue with my view on the hyperinflation. The only reason why, if you think about it, everything's got its value based on the amount of currency. So if we had, let's just assume we've got this glass here, right? And this glass has no water in it. And it's just got a little bit of cordial in the bottom of this glass, right? And we pour water in, right? We dilute it, there's cordial at this level, and then we go this level with water. So it's 50% cordial. We go that level, it's 30% cordial. Go that level, it's 25% cordial. That level, 20% cordial, right? Until you just keep pouring the water in, right? And then there'll be hardly any cordial left because you dilute it. And that's the value out of our currency, which has been diluted for our whole life. The monetary cycle that we've had has been since the 15th of August 1971, so it's 53 years in a couple of months. that we've had our currency the way that it is, and it's in palliative care. It's hooked up to a dialysis machine. It's been in a vegetative state for the last decade, but we're really going to start seeing it die over the next few years. And what other things are connected to money? And no one will really go through it to the level of what I'm about to with money. But as the more dollars that are printed, right, you can't stop inflation. This Jim Chalmers bloke, like, he put out a photo yesterday. This is just like, it's like sleazy salesperson pictures, right? Last night I saw an article of him where he posted, and he's like 25 years old, long hair, looked like he'd smoked a bong or something. And he's like, oh, when I was 25 years old or 20 years old, the thought of me buying a house was this. We had our challenges, trying to relate to people by doing that. And now he's come out and he's like, listen, we'll be able to keep ourselves to the 3% or less CPI. Right? Of course, you keep yourself less than 3% CPI because you're fucking lying about all the things that are attached to CPI that you're basing your increases upon. And the other thing that you're looking at is that you're sending businesses broke. People are going bankrupt. They're not going out spending money, but inflation is still happening. They cannot control the inflation gene. The hyperinflation will be very relevant, and you'll see it very clear when they start reducing rates without capturing inflation. That's when we'll start seeing it. But they've crippled the economy. They've crippled it. So when are they going to drop the rates? Are they going to increase rates more? For those of you that are concerned about interest rates going up, I remember back in February 2019, Philip Lowe said that the next move will be up with interest rates. And who's Nathan Birch? In 2019, people are like, get off the bongs, Nathan, like, you're talking too much whacked up stuff. Things I was saying back then sounded weird, but I said not before 90 days, not after 120 days, we would see our first rate cut, which we saw on the 4th of June 2019, and that was well before the illness happened. It was well before certain other things that occurred, but they started reversing monetary policy back then. Even though that they were saying from their official outlet and propaganda machine that rates will go up, rates will go up, rates will go up. They can't. Nothing will go backwards in value if they just keep printing the money. They've never printed the money, or the currency we should call it, at the rate that they have today. The rate that they have printed currency is not slowing down, it's increasing. The amount of debt that is out there, like if we go back to the 1992, the recession we had to have with Paul Keating in there. I grew up in a very liberal household. Everyone hated Paul Keating and the Labor Party and said, you always get a recession when you get the Labor. Well, I look back and I think, well, I'm politically atheist now. But this recession wasn't caused by whatever the sleazy bloke's name is. It wasn't caused by him or anything to do with his party. It was caused beforehand, right? But it was caused because of bigger forces that are bigger than our levels of government. But anyway, in 1992, there was $92 billion worth of debt that was out there in the country as a nation. Today, there's $1.2 trillion worth of debt. There was no debt going back 2 years ago. You're going to see this Jim Chalmers come out and say in his budget, which we'll dissect tomorrow. Tomorrow, I'm going to do another live with Ridwan Hannon from One Path Accountants, and we'll go through in a less fun time as what we're doing now. I might have some jokes and stuff in there, but I'll let him speak tomorrow. But looking at what he'll say is that we've got ourselves back to a positive position. We're in a surplus, a budget surplus, right? We're in a budget surplus, folks. But it doesn't mean that they've paid off the $1.2 trillion worth of debt that the country took out. $1.2 trillion worth of debt at 4.5% is $50 billion a year. Going back when the debt was first taken out at 10 basis points, it was $1 billion, and now it's nearly $50 billion a year. That's gone up 4,900% on the budget of the economy of the country. The interest bill for $1.2 trillion worth of debt is now $50 billion a year. That is almost the whole debt that the whole last recession that this country had in interest each year. right? They ain't paying that shit off, folks. They're going to take out more debt to service the old debt. If you look at the state of Victoria, their debt's about $200 billion. That's double what the whole country was going back 20, 30 years ago. So when we look at the debt that's sloshing around out there, there's a lot of, everyone's attached to debt, right? And if Yibbity guy that was on the economic bloke from the presidency was to really talk about the facts about money, he would be talking about the fact that bonds are printed, the nations print bonds, which is basically a loan, and now we'll go and sell those bonds to other places, and that'll create the debt. The problem is that the world is awash of these bonds, so we'll start seeing issues going into the bond markets, and the bonds are going to be worth a lot less than what people paid for them. That's why every time, going back in March 2023, we started to see, because the bonds were paying at a higher level, the bonds were losing their value, and that's why the banking system started to fall apart last year. So looking at debt, like, what is my thoughts and take on it? And I'm going to go back to the simplistic point of when I first started buying a property, what was my mindset and where is it at today, and how did I come to this conclusion? So looking at my personal debt story, I grew up in a household, I'm not going to give you like a rags to riches story or anything like that. I grew up in a family where, my mum celebrated when I first got my first house, right? She was like, wow, my son bought a property, he's 18 years old, got himself a property, bought myself a second property at 18. She was very excited, told everyone, it was like really cool. I bought a third property, it was like, whoa, slow down, right? We've got Britney Spears on our hands. Then I bought the fourth and fifth one, and it was like, hey, let's have an intervention with this guy who's lost the plot, he's going to go bankrupt, too much debt, whatever. And I'm talking about properties for like 150, 200K with very low amounts of debt. I still own them today. I owe like 90 grand, 60 grand for these properties. They're worth $1 million. I paid 150 for them or whatever. But yeah, looking at my mindset around debt is that I had to buy a property, work hard, pay out that property, get rid of the debt. Reality of it is that I realized how debt is used from a good perspective, right? And I see the value in being able to access capital. And everyone uses this term of, oh, I'm going to get in a debt, I want to pay out my debt, whatever. But two things I've learned. 21 years of investing this year, or in about a week or two, it'll be 21 years. It's my birthday next week. No need to wish me happy birthday because I'm getting old. But with it, 21 years of investing in property, and I initially thought paying off the debt is the important part of the game, right? You buy a property, pay out debt. Let's just go back and look at my first one that I bought. If I bought that for $248,000, which I did, and I got a loan at like 200 grand, and if I worked really hard, got a second job, paid it off, it might take me like 7 years if I was very, very fortunate to. I would have paid lots of tax. The tax system wouldn't have worked well for me, and I would have left the inflation out of the bag. So I would have paid off that property in, say, 7 years. I would have bought a second property, might have paid that out in 5, 6 years, would have bought a third and a fourth property. And I'd probably be sitting here on a Facebook Live with a lot less people here talking about how I've bought a property portfolio of 4 properties, I worked really hard and I paid them all off, and debt is bad, and I'd probably sound like Dave Ramsey in the US, right? But I understand the power of leverage, right? Because why would you want to save something which is not scarce at all, right? If I wanted to save something, I'd want to be saving some gold or silver or something that has a level of value which is scarce. The least scarce thing that there is the amount of dollars that are circulating, because they're never taking the dollars out of the system. They are putting more dollars into the system. So why would you be working so hard, selling your life, your hours, your 24 hours a day, time away from your family, your kids, and all of that, for a worthless piece of paper with a dead criminal printed on it, right? Why would you want to have that? Now they don't even have to print these things, right? You go back to the Weimar government in the 1930s in Germany, they used to just print the the money, printing the money all day, 24 hours a day, bang, bang, bang. You want to get more, you put more printers in, print more money. Now they just go, oh, we'll just put another digit on there. Oh, we'll just print up a bond. Oh, yeah, push, there you go. Yep, more money, more into money heaven. What is the point of the banks going digital? I'll tell you 100% what the banks going digital means. One of it is just the level of control, but the most important part is if the money is never yours, right, and it's always trapped inside the banking system, you can't have a bank run. These banks can't go bankrupt because the money is trapped. It'll just go from one bank to another bank. You can't take the money out of the system and the bank have a liquidity issue. So there's a very important fact there as we go digital. We need to go digital before we see the whole system implode. But my realization was I want to go and work hard and pay off debt. But I learned very quickly and I realized that inflation is the important part. And I realized the power of being able to leverage. So most people look at it and go, oh, debt this, debt that, debt the next thing, pay out debt, pay out money. I don't give a fuck about money, right? I really don't. I care about collecting the assets. I'm playing on the wall behind me. There's a massive wall and it's a Monopoly board, right? I'm playing the real life version of Monopoly and I'm trying to collect all the fucking assets off the playing board whilst most people are sitting there worried about money. They're printing more money. You go earn $100, that $100 today can buy you something. Next year, the $100 will buy you a half or 2/3 or whatever it could today. So that's the power of your money being depleted. So if you look at it from the flip side, and you're taking out the level of debt, and when you understand how debt really works, right? If you don't understand how debt really works yet, research it. That's why I go so far into it. The only person in this country, probably in the world, there's people in the world talking about this stuff, but they're talking about precious metals and different things like that. Be the only person in the property space that's saying this stuff because the debt becomes irrelevant with inflation. You're paying off today's debt with tomorrow's devalued dollars. That you buy a property, it's got cash flow to support its debt, right? You buy the asset, you've got the asset. The asset's getting inflated away because the next poor sucker that's going to come in and buy a property behind you, they're going to have to go and borrow more money to buy that same asset because that's what the banks are printing, right? And we're seeing the level of printing of money out there just going up and up and up and up. So the debt becomes irrelevant. You've got an asset that's being inflated away. You've got the cash flow coming through, which is being inflated away. That cash flow is paying and servicing for that worthless debt that you've got. And next time you look, your debt is basically nothing. You could pay out your mortgage for what it would have cost for a car in the future. That is the cool position of understanding how the debt works. When you go out and get debt, you want to make sure that the few things, and like just before there's any commies that are watching from the government or any institutions trying to say that I'm giving financial advice, I'm just talking common sense here. I'm just a crazy guy on the internet, so don't take this as any financial advice. But looking at debt, before you take the debt on, you want to look at like what are the important factors of taking this debt on. When I'm taking debt on, I want to make sure that the asset is fixed. I'm not going to take debt on and get Afterpay and go and buy myself a Domino's pizza and get sick from it the next day and then work out how I'm going to pay the $20 to get my pizza paid off in 2 weeks' time. I'm taking out debt because I want to acquire an asset. That asset needs to go up in value. That asset needs to have a cash flow that's attached to it to be able to service the debt, because who cares about the debt? I'm outsourcing my inflation. If I can take my inflation today, take the inflation from tomorrow and use it today, I'm doing the same thing that the countries, the nations, the biggest corporations in the world are doing. So I don't look at that I'm taking on debt. I'm looking that I'm raising capital, right? I'm about to go and get a massive loan. I'll talk about this in detail when it comes through. It's going to be an epic story. I told you all that I'm going to buy over 100 properties this year. I'm going to try and buy 100 properties in a month this year. That's one of my goals, right? And the reason why I'm going to buy 100 properties a month is to show to you guys that still my 4 core principles of buying foundation properties have worked throughout, throughout decades, right? Throughout decades. And if you could go and hop in a DeLorean, go back to the future and take yourself back to the year 2000, the year 1990 or 1985 or whatever the case might be, you'll be sitting there and going, shit, I wish I could take these opportunities, but what's it going to look like in another 5 or 10 years' time? So, yeah, looking at that debt, if I can get a fixed asset get a cash flow that's being inflated away and pay off that worthless dollars with tomorrow's even worthless dollars, I'm playing the same game that the big folks are playing on the rest of the world, and I'm playing it on a small scale that I can control in my own world that I see. So looking at the good debt and the bad debt, the good debt is just as everyone else would say, buy an asset, buy something got cash flow. I like things that are physical. I don't go and buy shit that I can't see, touch, feel. People go and buy shares, they go and buy real estate investment trusts, and they might show some good figures, right? But they're just no different than the CPI figures. Everything on the stock market, in my view, is a Ponzi scheme. I don't touch paper assets like that. You don't even own your shares. You go and buy the shares in a company on the stock market. Where do the shares? Are those shares physically in your possession? Can they just go and print a whole pile more shares tomorrow to raise more capital? You don't have any control over that. And your shares are held in a share registry. It's not held in your physical position. I'd rather have cryptocurrency personally. As I said, no financial advice on that front, because you can physically own them, right? I'm not even saying that crypto is good. I'm just saying the dollar is so bad. That's why your Bitcoin is now 100 grand. It bounces between 90,000 and 110,000. It's not because Bitcoin's any good. It's because Bitcoin is good. I take that back. But it's not because of anything to do with that. It's the fact that your dollar has been printed and molested so far that it has no value. And people don't want to hold dollars. And countries around the world aren't holding their dollars. The whole game has been manipulated, whether it be gold prices being manipulated, silver prices being manipulated, copper prices being manipulated. If silver went up to $1,000 an ounce, well, I'm not saying it will or it won't, but if it did go to $1,000 an ounce, that means that your monitor that you're watching this through, your iPhone that you're watching this through, which might need a half an ounce or an ounce of silver, would have to go up by another $1,000, right? So they've got to artificially keep some of these things low and some of these things high. So as an investor, I want to play the same game that the governments are playing. I want to play the same game that the largest corporations are playing. I'm raising capital. That's what I'm doing when I'm taking debt. I don't even see it as debt. Like, who cares about... I actually had the chat with my mother. Right? My mum's in her 80s now, and I scare her a lot when I talk about debt, and I'm talking about getting this big debt facility, which would be amazing. I said to everyone I want to be a billionaire by the age of 40, and that's next year. And will I get there? Maybe, maybe not, depending on how inflation goes by my side. But the input that I can control is the actions that I do to be able to collect the assets that I have and being able to take that through the thing. And I was talking to my mum about it, and she's like, "Oh, this debt, you need to pay it off." And I'm doing the high-pitched voice, right? Because those of you that know my mum's got a very high-pitched voice. And she's telling me how debt's really bad and I should focus on paying out my debt. And it's the same thing I've heard for 21 years of my life. By buying assets, collecting debt, playing a game of Monopoly, and becoming wealthier and wealthier at it because I've got the assets. And you want to be collecting the assets because the cash is trash. The cash has no value. They just keep printing it. You've got no control over how much they keep printing. They just keep printing. They double the amount of cash out there. Then there's half the value of what your asset is. Like your asset goes up to your cash that you think is your asset has lost half of its value. So if you can manage that debt well, understand how the debt works, and be able to use that debt to accumulate assets that are going to be inflated away and have the cash flow that is going to pay for that. That is the aim of the game, folks. That is the aim of the game. That's what everyone should be looking at. So looking at the financial education, like people say, people don't talk about financial education the way that I would talk about it, because I see it very differently, being through all those stages to get to where I've been able to get to today. But the financial education, I think everyone should be looking at, and especially if you're a young person. Let's say that people come in there like 16 years old and they watch my videos and like, I want to be, like Birchie in the future, whatever the case may be. Understand that, how the whole game board works. So don't look at, no one's ever asked me in my life, what do you get for your UAI or your ATAR or whatever the fuck they call it now, right? Somewhere, I've got a piece of paper somewhere that I went to school and got a good grade or some shit like that. I failed everything. But anyway, no one ever asks that. People ask me, I'll tell you what I get asked on a daily basis. I get asked, what's your credit score? What's your financials look like? What's your tax return look like? What's your set of accounts look like? What's your forecast look like? They're the things that I need to be able to manage effectively in life. I need to balance those books of mine. I need to be looking at how can I improve my assets and remove my liabilities out of my position. What options do I have? Most people are walking around with one option. That's to go and sell 40 hours a week, 80 hours a week, break their life, break their soul, give time away from their family, give time away from their kids to be able to go and get a little bit of money. And that's fucked, right? I look at every time I've got, I'm like, okay, how can I leverage this? How can I leverage this asset? How can I leverage this opportunity? How can I leverage this position? It doesn't have to be financially. It could be time. It could be all different things that you've got to leverage. So once you really have a game plan and go, okay, well, what can I do to get myself to the next level? What can I do to make the bank happy, to see me more attractive? And every time I sit there and I go, okay, I need to take out debt, I've gone back 15 years ago. I went and got debt, right? I haven't got debt for 10 years, not with a big four bank, not with lenders, most lenders for about 7 years. I've got loans with people, and I've got loans with not favourable terms, but it's like, what is the position? How do I go and take that to the next level? How can I add an extra zero? Every time I've repositioned myself, and it takes a while to get there, it's like, okay, now I've got these assets, I've got a pool of assets, I can strap them together, I can do this. I'm thinking more like a Wall Street banker than I am a first home buyer now. And it takes a lot to get through there. You can either go out there and learn it yourself or get beaten down and go back to conformity of being in the system, or you can go, fuck, I need to get out of this. I'm going to spend every single waking hour on working out how I'm going to be able to push through that system and make it work for me. So your financial education should be around how to keep the banks happy, how to, get that debt, how to get that revenue. So I take that word back, right? The debt and the revenue, I take that back. I don't want to use the word debt. How can I raise capital? And it's not revenue. Revenue is the cash flow that you're going to be generating from the assets that you acquire by raising the capital in order to be able to do that. I look back at some of the properties that I bought. I was looking at one the other day because I'm doing some refis. I'm looking at the loans of like 60 grand on a property. It's worth $500,000. I bought the thing for 100 grand. Like, go figure, right? Houses in Sydney that were like 150 grand. If I'd have listened to everyone out there, why would you buy a house that's kicked in? Why would you buy a house, a commission house in Mount Druitt? Those things at 150 grand are now $1 million, right? Was I smart at the time? No. I just calculated. I calculated my numbers. I understood my numbers. I had a game plan in order to be able to accumulate the debt and then to pay off that debt. And the debt is working very well. But I'm like, fuck, this currency that we're using is going to die. So how can I now lever up to the next level and get myself to the billionaire status? And that's by using debt, right? And it doesn't matter if I'm talking the 100 million to $1 billion, or if I'm talking, $1 million to $2 million, or 100 grand to $1 million, right? It's what do you have at your capacity and what do you have in your toolkit. I'm gonna like this, bang, 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 right, with my hand like a gun, because you need to know what your weapons are. You need to know what triggers can you pull, what options. Do you have a gun with one bullet in it? It's called a job. It's called, okay, yeah, bang, that's how I'm gonna make it happen. But it doesn't work. You're hitting, you're in a driving car, you've got all these factors, right? You're driving down the road with a gun, you've got the wind, you've got people moving, you've got all these factors against you. When you're I'm not trying to sound like a criminal or a street gangster, right? I'm just thinking, like, these are all the factors, right? If you only have one bullet, that's all you've got, right? The chance of hitting target while you're driving down a spinning road, that's why people aren't breaking free the matrix. That's why people aren't, retiring. That's why people are getting stuck in the bigger and bigger, worse and worse positions. You need to go back to the fundamentals and go, okay, how does this work for me? What does my exit look like? How am I going to get through it? So just as a bit of a teaser for next week, our next fortnight, when we do a Facebook Live, I'm going to pull one of my team from Zinger Finance onto the Facebook Live, and we'll go through some game plans on how to finance. What are some of the things the banks are looking at this year? How can you improve your position in the current market to be attractive to the banks, right? It's like going to a date with a chick, right, or a bloke if you're a chick or whatever, right? If you wanting to impress the other person, the opposite person that you've got on your date, you need to, you can't just sit there and be a slow boy. You can't do certain things. So how do you make yourself attractive to the bank? The bank's going to be the one that you take home. Are you going to take the bank home or not, right? And you want to Make sure you're positioning yourself well and be attractive. Yeah. So looking at that, if we look at the inflation, we look at the currency, we look at the recession. I always said, and this is very evident, right? If you go back to my videos from 15 years ago, I said you want to have a recession-proof property portfolio. You want to be buying the basic properties where the fundamentals are strong. If you're not buying on the fundamentals in a good market, you're going to be screwed when the market's bad. And that's why there's so many people that are in trouble at the moment, but there's so many people making money in a market like we've got at the moment. So if you're looking at the market we've got today, we're in a recession. We are in a recession. The economy is absolutely screwed up because they're not printing the money at the levels it needs to be printed. But if they print at the level it needs to be printed, we'll end up in a hyperinflation. So they're trying not to, but they can't. So they're going to have to print a lot more in the future. But the people that didn't have their fundamentals right, they're in trouble, right? The mortgage holders that are in trouble don't have their foundations right. But those that have had the foundation set correctly, they've bought below market value. So if they had to sell, then they're going to make money, right? I've got some of my investors I'm talking to go, okay, let's sell that one. That one there has gone up so fucking high, it's never going to go higher than that. Well, it could, right? But you can take that capital and use it to make 5 more steps over there. So what options do you have? So if it's below market value, great. If it's got good upside for growth, great, that's what you want. If it's got a positive cash flow or neutral cash flow in a bad market, imagine what it's going to be in the next market, right? So you want to make sure you've got your foundations right to be able to build that sort of base from. So yeah, we're in a market where we're in a recession. We're in a recession which has been man-made. The boom was man-made. It's all fake. It's all a Ponzi scheme. It's all a massive, big, fat-ass Ponzi scheme of a system. Someone just said here we've got the debt at $1 trillion. We're past the $1 trillion point. We're past the point of no return. No second job's going to save the government. No second job's going to save. The only way that they're going to be able to do this is at the total demise and collapse of our currency. When the currency crashes, everything goes up in value. That's why the currency loses all of its value. You want to be holding on to assets. You don't want to be holding on to cash. The best thing, in my view, and I'm just a crazy guy on the internet, I ain't your financial advisor, because I told you I'd share with you that video of that financial expert, right, a little bit later. So if cash is a worse thing to have, then debt is an asset within itself, because the debt can be paid off with a devalued currency in the future. And your asset, you've taken the ride of getting inflation attached to that, whether it be on a rental front or whether it be on an asset value, so a capital front. So on that front, I'm going to head over to the question section here, and we're going to watch the dumbness of our leaders in the world. Right? We're going to watch how dumb they are, and these are the people that everyone is listening to on the mainstream media and taking advice for and praying and hoping are going to be our saviors, right? If you think Trump's going to save you, you're kidding yourself. These guys are all just placed there. None of them can control anything because the system is so big. The system was there before these people arrived, and it will be there long after they've gone. And they're just being told what they can do and what they can't do. So I'm going to head to your question section. I'm going to play this video one last time, just for good old fun times. And just remember, this is who is controlling our economic. This guy here, what is his name again? This commie dude. Joe Biden's economic advisor, Jared Bernstein. Do they think this is a skit? I thought it was a skit when I first had it sent to me. Go and research the shit out of this guy. He's literally the economic two in charge of the US, which is the base currency for the rest of the world, right?
Government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They
Is that what they do?
They sell bonds. Yeah, they sell bonds, right? Since they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about.
I don't get it.
The government clearly prints money.
The government clearly prints money, right? No one's coming to save you, folks. No one's coming to save you. You want to take control of your own financial future, do the research, take control of your life, spend the time and energy. You think you're going to spend an hour a month on researching something, go, oh, I'm going to be so successful. It ain't just going to happen, right? Go watch Married at First Sight, go watch Kim Kardashian, go watch whatever crap that you're poisoning your brain with. Or you can spend that time, energy, and effort improving your life by learning, educating, researching. Doesn't matter what it is, right? Whether it be biohacking, whether it be your health, whether it be your wealth, whether it be whatever your spiritual side of your life wants to be. But choose what you're putting into it. Everyone's going to be watching the TV tonight going, oh, let's go to Albert Sleazy, he's going to save us, right? Oh, yeah, those bad coronavirus and China's trade war in Russia and Ukraine and Gaza. And it's a sad old world out there. That's why not many people break free from it. So I'm going to leave it at that. I'm going to go through some of your questions. If you have any questions, flick me a question. I'll read through them now and answer it for you. And I will be back tomorrow with a budget breakdown with Ridwan from One Path Accountants tomorrow. So do tune in tomorrow night. On that front, you'll see little notifications coming up on the screen tomorrow. Will we see, Maddie says here, will we see the hyperinflation in the US first? We're seeing and let's go through timelines of what we could see. I always thought that it would be around now, currency contracting. When they start dropping rates, we're going to see more printing happening, right? Next time you go to your barbecue, water cooler in your office, or whatever the case may be, start a conversation with people and say, hey, what do you think of the economy? Are you going to buy any property? Whatever. See how they behave, right? You get stupid responses. Oh, when interest rates come down, you sound like this bloke. Oh, I'm going to go buy a property when interest rates come down. Oh, yeah, like everyone else will, right? How many people are out there that will buy a property, but they just can't service? So when interest rates drop, they'll be able to service. So you're going to have a run to the door, right? It's going to come to more money printing, more currency creation, and more levels of inflation. The world trades the biggest export for the US. It isn't your IBM. It isn't, guns. It is probably weapons and stuff. Like, you've got all these things that they're producing. But the biggest thing that they're producing in the US is US dollars. So the world has to trade, and that's why there's wars going on. I won't get too far into wars and currency showdowns that are occurring around the world, because it's obvious it's out there. But the biggest thing that they're producing is dollars. So if those bonds, right, so basically if Australia wants to create some money, right, and get $1 trillion in to fix themselves up, they go to their computer. It's not their computer, right? They go to the central bank. The central bank prints out a little piece of paper and says, okay, here's your bond. And they go and throw it in the market. Another country might go and say, okay, we'll take up the Australian bonds. They have to go get some more printed money. So then it's just getting the monetary supply is increasing out there. So we're at a point now, the US has got bonds everywhere, right? The nations that are holding them, China, Japan, right? Japan's increasing their interest rates. Why are they increasing their interest rates for? Because their bonds are becoming worthless. if these bonds start going back to the US will end up in a hyperinflation. When the US ends in a hyperinflation, that's the base currency for all the world. I've never seen it happen. This is an experiment that has never occurred beforehand. This is a social experiment, just like Facebook and YouTube and all those things. So it will be fun to sit back and watch. But there's no way out of this system apart from via a hyperinflation. So that's the exciting part. Ian goes, do you mind providing an insight around hyperinflation and the consequences of owning assets without debt versus assets with debt? Look, the debt will become very easy, right? Like if we look at 50 years of inflation, 50 years ago, a house in Sydney would have been, I don't know, 15 grand, 20 grand from all my knowledge, right? A car would have been like $2,000. Now you could get a car and pay out 3 house mortgages with that one car. With a hyperinflation, the Big Mac will be $500,000. You'll be able to pay out your mortgage with a Big Mac, right? The Big Mac's a perishable item, so it's not going to be good. So yes, if you've got no debt, it's good. It's better to have no debt, I guess, in some aspects. But the point is that you want to control, if you had one house you could buy for $1, or if you could buy 50 houses for $1, right? But you'd have to take out a $50 loan to get those 50 houses. You'd want to take out the $50 loan and take out those 50 houses. The thing is that when the currency collapses, paying out a mortgage of $500,000 will be like paying out a $1 loan, right? It'll be nothing in the future. So that is where I see the benefit of being leveraged. You can be too over leveraged and you can be too under leveraged as well. So, whatever someone wishes to do, go and do it. But I'm not anyone's financial advisor. And I think if I was a financial advisor, I'd be better off than that mentally incapacitated, economic person that we see sitting in front of the mainstream media there. So, you said about it in a YouTube video 5 years ago in a bomb jacket. It's probably. I think I did a YouTube video in a NASA suit. I bought a like a fancy dress NASA. So I was like, "We're going to the moon, guys. We're going to the moon." I remember that very vividly now. Actually, I forgot all about that one. Gold is being bought up by central banks in record numbers. Correct. China, Russia, BRICS, Iran. These guys are the ones that are creating a new currency, which is a very much more stable currency, but no one's going to trust it, right? The trust isn't really going to be there. So, it's going to be, people will go to precious metals and people will go to other sort of commodities as things get more spicy. But I think that the spiciness of it will be the course of the next 3, 5, 7 years, and it's going to be an exciting time for us all to be alive. But for most of us anyway, if we play our cards right. No financial advice, just facts, bitches. Yeah, maybe. Next says they just announced in the budget more rent assistance, 10% increase to Commonwealth rent assistance. Yay, we'll be able to keep jacking up the rental income. There we go. 10% increase, right? We just pass it on to the tenants, right? The tenants get an extra 10%. I joke about the fact that that I'm probably the biggest Centrelink recipient out there because I'm getting my rent paid from the government, right? It's interesting concept. What do we got here? John says, very awesome, insightful information. Thank you, John, for watching, and thanks for the feedback. I appreciate it. If you guys like the video, give it a smash up on the likes, tag your friends and family, share it around. I got a bit passionate tonight, so... the banks are throwing cash at first home buyers. More tax slaves are needed for the Ponzi scheme. Yes, it's just a big old Ponzi scheme. Everyone goes, oh, you go on the news and it's like, oh, it's the greedy landlords, it's the tenants, it's the government, it's this, it's that. No one said there's never. This is why I refuse to go on the news, right? I refuse to go on to mainstream TV anymore because they will not allow anyone to say, because who controls the media, who is the owner of the media. It's a story for a different day, folks. But if you go down and look at who's on the share registry of 90 in the top 5 or 10 shareholders of nearly every single company in the stock market, you'll start seeing a pattern of who's there at the party every time, right? But they're not sitting there saying, oh, this is a scam that was played because the central bank's printed all this money and all this money has devalued the currency that you've got, and now you're sitting there copying it. They're pointing the figures. It's avocado on toast. It's the baby boomers. It's the Liberal. It's the Labor. It's this. It's that. It's the immigrants. It's whoever, right? And it's just one big ass Ponzi scheme there. I'm scared to get in debt when everything looks so bad. Where will this debt ceiling end? They're paying the debt by creating more debt. Yeah, understand that. And the world's a wash of debt. So the debt disappears, but the debt is someone else's asset, and the people that are most to benefit from it are the people that would be in charge of blowing it up. So it's so stacking up with silver and gold physically is a way to go besides holding on to cash physically. Also, do you buy gold and silver for backup? I'm very big fan of gold and silver. There's lots of things I talk about. There's lots of things that I don't talk about out there. What I do say is that I've been investing in gold and silver for a long time before I started buying properties. This was like 15 years old. I started buying metals, and we got more so into it in around 2004 and 5, probably because of Kiyosaki back when he was pumping the shit out of this stuff. And I've always been a very big fan of it. I've never sold a dime of it. I've just been a collector of it. It doesn't produce any income. It is very good for a time like now. A financial advisor, especially a dribbly fellow like that bloke I showed on the video beforehand, would not advise for that because it's not something that they can use. It's a thing that's against the system, not for the system. But I think you need to do a bit of research to make sure. I think you're on the right track by asking that question of where there's some value there. Ian said there is a big leverage opportunity. Got it. Yep, that's why I was seeing it. Pleasure, my pleasure. Luke says here, what would you say is under or over leverage? Is it an LVR range? I think over leverage would be not having the cash flow to support it. You want to have, like, people now are going, why don't I buy a house for $500,000 or $1 million? That's better than buying a house for 200 grand or a unit for 200 grand or whatever the case may be. Problem is that the cash flow on what is affordable, right? There's a ceiling of how high and how fast certain rents can go up. But when you've got the affordable ones and you start seeing stuff like the government giving away 10% rent increases, right? The average rent, would you want a 10% of 5 properties at $300 a week, or would you want 10% of one property at $500 a week, right? $3 grand at 10%, $300. $500 at 10% is $50. So you go figure what's best. But looking at the LVR, I think it's important to keep your position, 80% is nice and solid. However, you want to make sure your cash flow is going to be able to keep up. You want to make sure that your key rate, i.e. the doors that you're buying in your properties, is at a certain threshold, which I've always spoken about, 150, 200, 250, 300 grand sort of price range per door. Giuseppe said here, BlackRock, that is one of them, yes. Tommy says, hello legend, my neighbour Carlos is watching with me and he wants to buy a house at the end of the year. He's asking if you see any price corrections if the rates go up. He's looking to buy in North Queensland. I've told him no, but he won't listen. Hope you've been well. Been really well, thanks Tommy. As for will the property prices crash if rates go up, the interest rates have gone up 4,250%. Right? Go do the sums, 10 basis points to 435 basis points over the course of the last 2 years. We have seen massive booms. If you go and buy in Perth 2 years ago, the prices have doubled. You go and buy in North Queensland, the prices have doubled. You go buy in a lot of locations, prices have doubled. And that's in a rising interest rate environment. So imagine when rates do come down. An interesting time. Jade said, immigration is tipped to be at an all-time high over the next few years. To what is already under stock, there's only one way this is go. I put out that article beforehand saying that we're building the lowest level of building approvals in 12 years. 12 years takes us back to 2012. What happened after 2012? They dropped interest rates and boom, property prices rose. These things are waves and cycles. They're waves and cycles, and it's purely just one big Ponzi scheme that's out there. So Luke says here, do you still do MAP sessions? Yes. I do the MAP sessions for all of my investors. I do all the purchasing and the guidance. I wouldn't say the word advice because I could get in trouble for giving advice, and I don't do that certainly, but I do consult and give guidance and support to my investors that I help out. So if you want help, there's a link in the description. It's in the description where you're watching this from for a chat with the team, with a discovery session. If you want to go from a discovery session to a MAP session or want my help in building the portfolio, the team can then organise for a strategy session with myself. So on that note, folks, I'm going to be out. I'm going to go to the gym, work on my health, keep getting awesome, and I'll see you guys back tomorrow with a breakdown of the budget with Ridwan Hannon from One Path Accountants. If you want help in building out the portfolio, reach out to us. You can find us on socials, send us an email, admin@beinvestor.com.au, call us 1300 367 925, or click on the link in the description and book into the calendar a discovery session with one of my team and work out where to from there. We'll catch up soon. See you tomorrow night, same time, same place. Bye for now.